Hello and welcome to another update video about the HBAR chart. So HBAR, I think we haven't covered it yesterday actually, but overall the parameters remain intact. Okay, so support is still holding, which is the most important thing. This support area is probably the most important thing on the short-term chart between 23 cents and 26 cents. Well, actually, probably even the lower support area, but until we break below upper support, there's no need to focus on lower support because we don't even know if upper support is going to break. So as long as this is holding, there is no sign for a more, let's say, substantial top, for a major top or anything. Because this support area is the pivot between the white scenario and the orange scenario. Any break below 23 cents would confirm a deeper correction and would invalidate the white scenario, which shouldn't really break below the 50% retracement. Okay? But because support is still holding, it's not very clear whether the bulls or the bears are taking the lead. Now, don't get me wrong. I would still like to see further upside, right? And we can just take a quick look at that on the longer time frame chart, the larger time frame HBAR chart. So don't get me wrong. Don't think it's like up or down. Well, it is because the market can do anything, but I'd like to see more upside. And actually, I would like to see more upside as per the labeling on the daily chart. And again, the white scenario is leading. That's my primary scenario. That's what I prefer. And I would like to see actually one more high at least in wave C of the larger third wave. So we talked about that. Shouldn't be any surprise. In this scenario, the market might reach, first of all, 39 cents next. I mean, that is the upside breakout point, you could say. It's the level that was tested in December and that needs to be broken in order to unlock prices in the region between 49.3 cents and 66.2 cents. These are the next upside levels to watch here. But the market first needs to break above the December high. And it would overall look best to get one more high, just based on the microstructure and based on the internal structure, of this third wave. We consider this as an ABC structure in wave 3, which is based on the larger degree wave structure. Then the C wave should ideally be a little bit longer. I mean, it doesn't have to be, but it would look best. This is what this is about identifying the most probable pathways. And of course, I can't rule out another short, setback and then one more high. But either way, as long as the 23 cent level is holding, which is the 50% retracement of that C wave, just double check that. Depends on from where I'm drawing it, but so it's around about 23 cents. Oops, one here, 22.3. Depends on if I really caught the low properly there, right? And also depends a little bit on the exchange, but we're talking about roughly the 23 cent mark, and that needs to hold 22.5, 23 cents. And this is where this micro support level comes from. Again, it depends a little bit on, whether you're using USDT or USD, is it the spot chart? Is it the futures chart and so on? It's not so important exactly that level. It's about, do we hold it? So there could be a wick below, and it wouldn't break support, because if the buyers still step in and it could be at 22.5 cents, then support isn't broken. But anyway, as long as this support area is holding and the price reacted to it already a few times, the overall focus could be on higher prices still. But there is quite a bit of messy overlapping sideways structure here, which is normal for corrections. So the market has now been in a correction for the last 4 weeks. And there are a few microstructures that we considered here. The triangle pattern got invalidated recently, but looking at price structure now, I think it's coming back onto the agenda, just in a different form, because it could just be, again, a wider triangle pattern. So that, for example, this fourth wave that actually might have completed already is still unfolding. Okay. In fact, there are many, many microstructures that could apply here. Let's talk about a few. So as I said, one scenario would be a triangle. I haven't actually labeled it. We did consider it before, like an A, B, C, and then we thought maybe it's going to form a D wave and then an E wave, and then we break out higher. But this move up was a little bit too high, and we only talk about not even a cent. So it invalidated it technically, right? XRP is following its triangle. It's a very similar structure, but XRP didn't break higher here, and then it remained a valid triangle. It formed it in a slightly different way, though. But yeah, with that high, obviously it invalidated the previous triangle count. Now, with the change that we have now, I could even say A, B, C, D, another higher low in wave E. Yeah, so that's possible. I haven't labeled it specifically because in reality, it's not much different from the white scenario. We can still adjust it later. But in the white count, we already completed a wave 4 here on the 20th of December. And we're now moving up in a diagonal pattern. But the problem is the initial rally was only in 3 waves. So it's not clearly bullish yet. It would be wave 1, then wave 2. Is this wave 3? Well, it's not clearly impulsive. I mean, I don't trust it. I think we still have to be ready for adjustments of the microstructure. And to be honest, the market is only moving between support and resistance. There's a micro resistance area located here between 30 cents and 32.2. Which is for this potential 1-2 setup here, actually. But even here, the invalidation point is the 33.9 cent level. That's the invalidation point for a 1-2 setup to the downside. But again, without a break below 23 cents, I think the bears aren't clearly winning. So we have to be flexible here, okay? For me, I think that it boils down to a few things. As long as we're holding the 23 cent level, I'd like to watch for higher prices. Unless I see clear signal that the bears are starting to lead, which so far they haven't done. Yeah, there were instances here and there where we thought maybe the bears are taking over, but they couldn't sustain it. I'd like to see a breakout to the upside. The 33.9 cent level, if it's broken to the upside, would indicate an upside breakout is on the way. And as long as pullbacks remain corrective from here and even form higher lows, they could present a setup for higher prices. That's the update about HBAR. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.